Oh, well, hello there, folks. Marziti here with a new video. This one is called Fanning the Fire and Ice. And let's take a look at this kind of a trading strategy and see what we've got here. First of all, of course, we've got the Standard Legal. This is a presentation that I created. I am not a financial advisor. This is for educational purposes only. I'm only a member of the Bullish Bears community. I'm not compensated in any way. This does not represent the opinions of the Bullish Bears necessarily. You're responsible for your own trades. You're welcome to copy the video as much as you like, as long as credit is given. Okay. How would you like something like this? This is the London session. This is the 9:30 open. I'm Eastern Standard, so 9:30. Take a look. These fan lines and these red and green zones, or red and blue zones here. Take a look how we went up to the zone. We came down to a fan line. We came down to a fan line. We did break, but where did we come to? Fan line, fan line, fan line, rejecting out here. Look here, we've got a fan line here, fan line. Interesting. If you're interested, that's what we're going to talk about. Now, there's really three components on this chart. The first is called fire, designated obviously with red, and this represents rejection zones. As a matter of fact, let's just go on over here. We're going to talk about rejection zones. That would be fire. These are strong rejection points. Then we're going to talk about ice, and that's going to be consolidation zones. Let's mark this chart up and let's just kind of start seeing what happens here. The fans, actually, before I do that, let me talk about the fans. So we're marking up three things. We mark up fire, ice, and then we put in the fans for a total overall picture of things. Now, what are the fans? The fans go to the London session. Now, again, I'm Eastern Standard Time, so that's 2 a.m. for me. Excuse me. 2 a.m. to 5 a.m. And we're looking for the sentiment from the London session and see how it projects into the rest of the day. We're going to mark from the London Open to the highest high between, again, in my case, Eastern Standard 2 a.m. to 5 a.m. So I'm looking for the highest high in that range. And then I'm going to mark from the open to the lowest low. At the end of that session, we're going to take our two lines that we made, we're going to divide it into eighths, and we're going to mark it. I'll show you what that looks like here in just a moment here. Actually, let's go back. This red line is the 5 a.m. And so what we did here is I came from top point, or a point here, which would have been this line right here, and this line here. And then I divided this chart up into eighths. I also went eighths outside of it, on the outside of it, which was a good thing because you can see what happened later on down here today. Anyway, we'll move on. We're actually going to mark up a chart, and let's just go ahead and get on over to it. I'm going to start on the 15-minute chart, and I'm going to go here. I'm looking for the 2 a.m. to 5 a.m. time period. So I'm going to spread this out and spread it out until I can get, and now let's exaggerate it this way a little bit. All right, so let's just, so that everybody can see what's going on here, I'm going to draw a line on the 2 a.m. open right there. And yeah, it's this spinning top right here. So let's go ahead and put some lines in here. From the 2 a.m. open, I want to go to within 5 o'clock, the highest high, which would be this candle. And from the 2 a.m. open also, the lowest candle, which is this one. by 5 a.m. All right, now let's draw this in. I'm going to put a vertical line on the 5 a.m. right here. And then I've got a tool that I've created called the fan levels. You can do this any number of ways. I just scripted this over in Tradovate. But I'm simply going to come here to here. Let's draw this out a little bit. I have my 0 anchored down here, my 1 anchored here, and then I go outside of this zone. Notice these are in eighths. So we go from 0 to 12.5, or 0.125 to 0.25. Here's our 50%, and so on. Now what I'm going to do to continue these fans here is I'm going to draw lines, and I'm going to start at the London Open. And I want to nail. Now a lot of times it's kind of hard to get this exactly so. So what I'm going to do is I'm going to drag it a little bit far out to the right, and that'll give me more precision on that one little spot. So we're going to draw that one. Again, now I'm looking at the 75. I'm looking at that 62.5. I'm looking at the 5 right there. This is the sentiment from the London session. And as far as the range of expansion that we saw during London, we're simply exaggerating the range from the London session. Now, there's probably an automated tool out here or something like that. Maybe some point we can script it in. Whoops, I got to select line first. We might be able to script it in Trading View or something like that. I'm going to go ahead and put some more fan lines on here. Here. And we'll do maybe 2 or 3 more. Okay, let's see. Let's bring this chart down so I can get that 125 there. Yeah, this is kind of a long manual process, I will grant you, but if you can make the trade that I showed you this morning, you'd have to ask yourself, is it worth taking the time to do it? So there's the 25, and I'm going to throw one more in there. I will comment that I think this trade is best suited for runners. Right there. Okay. There are our fan lines. Now this day it's actually, at the time I'm recording this, it's about 11:30 Eastern. We haven't even approached noon yet, but we had this humongous move. So let's just take a look at just the fan lines. Look here, right here. We've got a rejection here. We've got an interaction here. We've got one here. We've got an interaction here. If we go into the pre-market, we're walking along that fan line here. We came down to this one, back up to this one. So this London projection actually seems to have some weight to it. Now, what the other things that we need to do at this point, there's the fans. Let's talk about now the fire and the ice. Now, the fire and the ice are going to be the, we're going to get rid of that there. I'm going to move to the hourly. And I want to go back about 21 days. So today being the 9th, so there's one, so let's see, let's go back. There's 1, 2, 3, so somewhere around the 19th would be a good place to go. So let's just swing back over here. Might help if I keep the chart in mind. Where's the chart? There it is. Okay, here we are on the 19th. Now what I'm looking for, we're going to do fire. Fire is a rejection wick. Now, in a way, this is like supply and demand. What we have here, notice we kind of trended in here. We have a market structure shift coming out of here, including a fair value gap. So I'm going to mark this wick and only the wick. Now we're marking fire, so we're going to call that red. Save that as default. And I'm just going to follow this along. What have we got? Well, we're kind of walking along here. We're coming up. This is not a rejection here because, we were already kind of trending. Could be a pullback. We'll look at some of those as well. You could say there's a pullback right here because we did pull back a little bit. So we'll go ahead and mark that. This gets a little bit faster in a moment, as you'll see, because we'll start running into overlap. I've got a pullback here because I've got a pretty good, or a good wick here, rejection there, followed by a good strong candle that followed it, so we'll mark that. Let's just kind of move along. See there, we came up not quite into it, but we did get to it. All right, we got a big push down here. Let's mark that. Again, we're only marking the wicks. Now, do we mark this one or not? Well, it's kind of in between these two here. My rule of thumb generally is if there's about 10 points, if there's more than 10 points between these zones, then I probably will. Well, we see we're at 65 here to 00, so that's about 35. So I'm going to go ahead and mark that. One of the good signs about a rejection, a clear sign, is when we certainly take out some of the previous lows. So that kind of tells me that, that was a liquidity run. All right. Now, we see there already in one. Here we go. We're starting to see overlap, so this is going to start moving faster. I've got a rejection here, because we came down, rejected back out. Now, a crazy wick candle like this, oftentimes if you look at it, like this candle, if you look down here at the very bottom, you see it was the 3 o'clock candle. A lot of these top of the hour kind of candles, a lot of times are going to go nutsy, and I'm not going to bother with those. Now, we did actually come up here. We did actually set a higher zone. We'll mark that. There. So we got two zones back to back. Again, here's the 8 a.m. candle. That's a news candle or whatever. I'm not going to mark that one. All right, we got a big rejection right there, but a tiny little wick. But a wick is a wick, so we'll go ahead and mark it. May not count for much, but we'll see. All right. So that led us up. So this is today's action over here. So I'm not going to mark that. Now, that is fire. I know it took a few minutes, but one thing you have to realize, you only have to do all this large markup once, because after that, the majority of your time is going to be just maybe doing an update once or twice every now and then. Now, ICE. Let's take a look at ICE. Now, what ICE is when you see a consolidation zone and another consolidation zone. But before I forget here, I need to give credit where credit is due. I completely forgot to do that. So let me do that now. First of all, this idea of rejection, while it is kind of a supply and demand, what really got me thinking was when Jeremy over in Bullish Bears did a video talking about the wicks and the sensitivity that the wicks can have and things like that. And I know Kevin does supply and demand, and this is certainly something that ties in a lot with that. So between Jeremy and Kevin, both talking about this supply demand, this wick, these pullbacks, that kind of idea, that was one side of it. The other side of it came from Creedmoor, another Bullish Bears admin. So we got three different people, three different trading styles, throwing ideas here that I have kind of taken different things that they've said and crafted something, including the fans. The fans came from Jeremy. So we're taking the different things from different moderators, trying to see, well, if we put it together, do we get an actual package? Now, each one of those, Creedmoor, Jeremy, Kevin, all three of them are perfectly good, profitable traders unto themselves. But we say, when you walk into a grocery store, you don't take everything off the shelf. You take only what you want. And so I say, well, if we look at these profitable day traders, and we know they're profitable. They stream right in front of us. We see their trades. And so we see if they win. We see if they lose. So I'm taking certain little elements from each of them, and let's see, can we craft an overall strategy that we can use to make longer swings or whatever. And it's kind of interesting here. Creedmoor, for example, is a multi-hour, multi-day trader. Kevin can be in a trade for an hour. Jeremy is in a trade for 5 minutes. So we've got three different time traders here, three different styles, different things like that. But let's just kind of see what happens. Now, one of the things that Creedmoor talks about are these conversation zones. This is called price agreement here. You can see, we also would call it chop. Chop, 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 choppity, choppity, chop. What does choppity, choppity, chop mean? Well, it means consolidation. It means waiting on something. It can also mean that this is simply an area where everybody's happy to trade. And so when we see that kind of an area, we want to kind of see how it comes back to it here. We got chop here. We got chop here. We came up into the chop. All this repeated area coming back to this area kind of tells me that this is kind of like a magnet zone. And we're going to call this magnet zone ice. That's right. Here comes the ice. All right, so let's kind of look for, so now you can see I kind of scrunch the chart up as I'm looking for these ice zones. I see one right here. Let's take a look at that. What do we see here? I'm kind of looking for the, where 70% of all the action is. So I'm going to say, like there, maybe. Let's see, I've got a zone right here and right here. Interesting if you'll notice that some of these are fairly close to one another. Let's kind of go, I see this right here. Let me open this up so you guys can see that a little better. How about we'll take right here. Kind of like there. All right. Now, what do we notice here? We notice also fire and an ice meet at the same place. What does that kind of mean? Well, to me, that would be a stronger magnet. Stronger magnet simply because it's got two different reasons for price to come back to it. All right. Let's just take a look at where we are. There may be some others in here, but at this point here, I'm going to stop here. And now what I want to do is I want to come in on the 5 minute and I want to see what happened today. Matter of fact, with the ice parts, you can actually come down to the 15 minute. Sometimes it's easier to see. I didn't realize I was actually still on the 1 hour. But sometimes on the 15 minute, it's easier to see the ice. All right, let's take a look here. Let me draw a line at 9:30, which is my market open time because I'm Eastern Standard. Where are you? Right there you are. Now, of course, we can always trade the markets beforehand. But let's just see what happened. Well, the first thing we see happened, choppity, 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 chop. We're in that conversation zone. we continue to dance with this line right here. We bounce around in here. When we finally move out of here, what did we do? We went to the next line. Now this is a rejection zone normally. We kind of broke it. We did go up to another rejection zone though, which happens to coincide with a fan line. Coincidence? No. I would call that more, what's that word when multiple things agree? Anyway, I'll think of it in a minute. Anyway, I've completely lost the daggone word. Anyway, here we are. So we've got this line and we've got this fire zone. What does that tell us there? Multiple reasons that this is both a target and potentially a rejection zone. Well, sure enough, we reject. Right back to choppity choppity chop. Here we go. Down, fan line, pow. Big magnet here because we've got both fire and ice here. Bam, bam, bam. Right there it goes. Now, now we can see that we are pulling back. Look right here. We look right here. Look at this candle. Stopped right here. We stopped on this here. All right, we've got a pullback here. What's going on here? That we're still live in the market. We're going right back into that choppity zone. We'll see what happens to that. Now we ask ourselves, okay, all this is really cool and fascinating, and we would all love to get this kind of a move right here. I mean, golly, that went from 52.70 down to 52.10. I mean, that's 60 points. Oh, wow, that would be awesome to catch 60 points. Well, all right, so there's a couple things we first have to identify here. First of all, this is probably a strategy best made for runners. What's a runner? A runner is where you're in 2, 3, 4, 5 contracts, and you take one of them off as you reach targets. Let's just say, for whatever reason, let's say that, let's just say you took the break of this fan line right here. You took the break of this fan line and you went short. Well, let's say you had 3 contracts. You might take 1 at this fan line, 2 at this fan line, and the third one you just let it run and run and run until it pulls back a fan line, which would have been all the way down, pulls back a fan line here. That's called a runner series. Now, other people trade a runner, for example, say they have 3 contracts. They'll take their 2. If you broke here, they take 2 of them right here, and they only leave 1 of them running to catch, to see where it goes, and they move their stop to break even. So they really profit on the first 2. Or you can do it with just 2 contracts. 1 is your main contract, 1 is your runner. Either way, whatever you do, whatever is more comfortable with you. Are there things that can help us, though, to figure out, well, it would be nice if I could figure it out that this was the turning spot? Well, there's a couple things that we can look at. Number one, we can look at the fact that we're hitting a fan line at about the same time that we've got a fire line, or fire zone. That's one idea to look at it. We can add some indicators. Maybe that will help us. Let's take a look at a traditional MACD. Here's a traditional MACD, 12.26.9. Let's throw that on there and let's just see what it might have told us. And if we so a MACD is not, I wouldn't use it for trading so much as for telling me that something is overextended or extended to the downside. We kind of see that we're overextended here, so I might be looking for a pullback. And if I were looking for a pullback, then let's just see what kind of trades I could have gotten here. According to the MACD, all right, let's just open this up. Let's move this in. We're showing that we're overextended. I'm thinking there's a pullback coming. Well, here's a pullback coming. Now, what would I take for a trigger? I would take a break of a candle that closed below the line. What do I mean? Let me open this up a little bit right here. You see this candle right here, it closed below the line, but nothing broke it. This candle came down to it, but did not break it. So that's not the signal. Let's keep looking. Here we go again, close below it, no break. All right, now, so we've got these breaks here. You could take this candle right here because it did break. Well, it broke that one, not this one. So maybe let's just kind of come. We could have taken it right about here. Maybe. Or you could have just simply said, here's the candle that closed below it. Here's the break of that candle. Here's where we go short. First target, right here. This fan line. What I think is going to happen when I get into this ICE zone, conversation between buyers and sellers. Well, that's what actually was happening. And then what actually happened was there was an auction, a federal auction, TIPS I think it was, that did not go well. And because that auction did not go well, we had this humongous plummet. However, it would be my speculation that if that auction had gone normal, we'd have probably chopped in here for a while in the conversation zone before we, moved on or whatever. Anyway, so there's one idea. Well, let's take a look down here on the bottom side. Can we get any clues here? Well, we're going down, we're going down, we're going down. MACD is starting to flip right here with this big reversal candle right here, which tomorrow I'll probably mark that zone. And so we see that we're now moving up. You could say that you could take maybe the break if we're looking for a close above this. Here's this candle's high. Maybe you could take this here. You would have had some pullback, but then you would have gone right back into a fire and ice zone. So there's an idea. Other things that you can throw on here, you could throw on also TTM squeeze with the default settings. Again, it depends on whether you like indicators or not. You may just trade pure price action, and that's fine. Okay, I've lost my MACD now. All right. Let's see. What happened there? I don't know. But at any rate, you can see here similar concepts, different things like that can maybe give you some clues if you're looking for some ideas as far as turning points. So at any rate, that in all said and done gives us fire and ice, and this chart right here is today's price action, and that's what we had today. Now this is not normal, we know that, but and actually I've since remarked the chart up because that was erased everything and remarked it as you saw, so this is not exactly the same. But I hope you guys get some use out of that. Again, I appreciate the insights and the input from Creedmoor, from Jeremy, from Kevin, the Bullish Bears. If you're not a member of the Bullish Bears group, feel free to come check us out over at bullishbears.com. It's a pretty, like I said up front, I'm not admin, I'm not compensated, I'm a member just like you guys, and I found these guys to be very legitimate and straight up, and I hope you guys come join us. This is Marziti signing off. Bye-bye.